Everyone is going absolutely bonkers over these AI stocks, especially Nvidia. Everyone's talking about how this AI revolution is going to change the world. And sure, maybe it will. But we've been here before. Remember the dot-com bubble of the early 2000s? The internet bubble really started to form at the start of the century, and the index skyrocketed 150% in just 2 years. But then, bam, it fell 75%. It took the market for years to get back to its pre-bubble levels. That was a painful experience for most investors, but also one of the biggest wealth-generating opportunities in stock market history. Sure, the recent advancements are impressive, but AI is nowhere near its final form. The current total addressable market for large language model APIs is only $10 billion, dominated by OpenAI and Anthropic. However, the market cap of the big 7 AI companies is over $1 trillion. That's 100 times larger than the actual market. Think about that for a second. Most of the gains you have made so far are paper profits. It is time to lock in some of those gains before it is too late. The good news is that the market is efficient in the long run. So as soon as this euphoria phase ends, the market will begin to correct itself. Not only do they have the lowest options trading fees on the market, but also their new predictive analytics feature is incredibly useful. Well, first of all, we need to understand why this bubble is so big and why it is going to burst. I believe there are 3 major reasons for this. It is called FOMO, and it has been driving the markets up since 2020. But this FOMO is fading away quickly. More and more people are realizing that they missed the boat on Tesla, Bitcoin, and now AI. And as the markets begin to correct, more FOMO will fade away as well, causing the market to keep falling. If you want to learn more about options, you should check out my options crash course playlists, which I will link below. Since AI became popular, every Tom, Dick and Harry is trying to join the party, hoping to get rich quick, and this is causing valuations to skyrocket. But as soon as the Fed starts to cut interest rates again, all of these speculative projects will begin to fail. They won't be able to raise enough money to stay alive, and this will cause a wave of bankruptcies across the board. So if you have not invested into stocks yet, now is a great time to start. Understand that the market will not keep going up forever. Corrections are completely normal, and the sooner you accept this, the better. The second is to diversify your portfolio. Don't put all of your eggs in one basket. AI is growing exponentially, but so are other industries like space exploration, green energy, and biotechnology. Third, you need to be patient. Don't panic sell when the market begins to correct. Instead, buy the dip. This is when the real wealth is created. And fourth, study the markets. Educate yourself. The more you know, the better you will perform. They are giving the entire $1 trillion valuation to 7 companies based on an entire industry worth only $10 billion. With that said, if you liked this video, make sure to check out my previous ones. Thank you guys so much for watching, and until next time, it always does. So whenever that happens, there will be an abundance of great buying opportunities. There were way more sellers than buyers, and you know what that means. That means that sellers were getting squeezed out of the market. But why? Well, it turns out that almost everyone on the internet was buying calls at the time, pushing the price of calls higher. Those who sold calls for a living were getting obliterated. So what does that mean for us? It means that we should have bought calls as well. And guess what happened? The stock kept rising for months. And speaking of buying opportunities, you know how much I love options. They allow us to profit from both rising and falling markets. And they are a great tool to boost our returns. And it gets worse. Look at this. Bybit, a crypto exchange, recently announced a $10 billion investment into AI. Let me repeat that. And since the start of the pandemic, central banks around the world have printed trillions of dollars, devaluing our cash and making investments more attractive. But this free money is running out. The Fed has already raised interest rates to their highest levels ever. And if inflation begins to pick up again, they will have to keep raising rates even further, which will cause asset prices to fall. A crypto exchange is investing $10 billion into AI. That makes 0 sense whatsoever. How are they going to compete against giants like OpenAI, Anthropic, and Microsoft? They aren't. They are simply throwing investor money into the market to push valuations through the roof. Yet the entire market cap of Nvidia is now worth more than the last 3 years of combined revenue. Of course it will. But this rush to invest into anything that even remotely relates to AI is insane. We're currently in the most dangerous phase of the AI hype cycle. And according to the chart I showed you earlier, we only have days, maybe even hours to take advantage of the upcoming crash. Apple, Microsoft, Alphabet, Amazon, Meta, they are all trading at absurd valuations. And with every new announcement, they keep pumping each other up even higher. This reminds me of the dot-com bubble where companies like Pets.com were valued in the billions, even though they were literally selling dog food. If a company was not .com, it wasn't worth anything. Back then, it didn't matter if a company had no revenues, no profits, or even a business plan. As long as they had a catchy name ending in .com, investors would throw money at them. And we are seeing this happen again with AI. The internet was going to revolutionize everything back then as well. Everyone was buying internet stocks regardless of how bad the financials were. And today, only a handful of those companies remain. The rest went bust or got bought out by the survivors. It is precisely this type of euphoria and mania that causes the greatest investment opportunities for us regular folks. Because when everyone is running away from a certain sector or an entire market, because they fear missing out on the next big thing, that is when we can make some serious money. So the question is, what do we do with this new AI bubble? Low interest rates and quantitative easing cause asset prices to rise, and if they go away, those asset prices fall. But this is not true. Yes, monetary policy has an impact on the markets, but other factors are far more important, especially in the long run. And one of them is people's behavior. When people are greedy and have FOMO, asset prices rise faster than fundamentals can keep up. And when their greed turns into euphoria, that is when things get out of hand. Should we be buying into it, shorting it, or are there better opportunities elsewhere? We will answer all of these questions and many more in this video. So let's not waste any time and jump straight into it. So let me show you a chart. This is a chart of the Nasdaq index from the beginning of 1998 until the end of 2001. The reason I am showing you this chart is because the same exact pattern is forming right now. Here it is. The Nasdaq is up 136% from its COVID lows in 2020. And yes, while the overall market is up around 40% since then, this is still extremely elevated and way above its pre-COVID levels. Many stocks in the Nasdaq have more than doubled in value already and even tripled. Now, I know you might think that different times require different valuation multiples. And we are seeing this right now with AI. In reality, AI is still in its infancy. So here's some interesting stats. And don't get me wrong, I am not saying that AI is not going to be revolutionary or that it won't generate huge amounts of wealth for investors. So here is a piece of advice. If you have invested in the stock so far, take some profits off the table. Of course, we don't know exactly when the bubble will burst, but we do know that eventually it will. Let me tell you a story. A few months ago, I noticed something strange happening in the options market. I've done this again and again with great success. I have to say that public calm is the best place to trade options. Alright, so how can we protect ourselves from this upcoming crash? The first reason is easy to understand. People love easy money. Reason no, 2 is even more important. People hate missing out on potentially life-changing gains. And finally, the third reason is the most important one. There are simply too many players in the game. So when all of this happens, what is the best way to protect yourself? First, you need to prepare mentally. These are just my thoughts, of course. And please remember that I am not a registered financial advisor. This is not financial advice.